All right, let's get to the ECB conversation right up front. 4 years after the Fed began, 4 years, since the Fed began tapering, Mario Draghi announces plans to cut ECB's bond buying program. The quantitative easing program will be reduced to 30 billion euro a month from the current 60 billion. This is, starting January 2018. However, interest rates will remain at 0% well past that period. Now, to discuss what this fairly dovish taper means for global markets, especially emerging markets like India, we're joined on the show by Richard Gibbs. He's principal at Plantagenet Investments. Richard, good morning to you. Thank you for joining us here at Bloomberg Quint. A dovish taper, as every single commentator has said this morning. The euro we saw declined on that news coming in from Mr. Draghi and his commentary thereafter. What do you make of what the road ahead has for both currencies and global equity markets?
Well, look, the comments or the statements consistent with what we've seen from the International Monetary Fund in its review of forecasts, and it shows that the European or the ECB economy or economic region is continuing to recover. They were later to the party or the table, as you said, in terms of quantitative easing, so we'd expect to see the impact of that, the positive impact, being delayed, and that's what has occurred. The ECB still has concerns, though, of course, on the inflation front. And when you take out the fuel and the fresh food prices, they've still got an underlying rate of harmonised inflation of close to 1%. And that's getting close to stalling or deflationary levels again for them. So they're still concerned they're not out of the woods there. I note that they are really keeping those asset purchase program very open-ended. They're saying through to September 2018 or beyond. And of course, they're going to keep interest rates at current levels, including that tax on overnight deposits, of course, which they introduced to discourage a hoarding of cash in the interbank market.
Yeah, they've also said that they're going to continue to reinvest proceeds from the bonds they've already bought into corporate bonds, and that could be a mighty sum, as Mario Draghi himself put it. Do you see any divergence now at all between the way the Fed is proceeding and the ECB is proceeding? And since both, according to me at least, seem to be striking fairly dovish notes, will this unwinding of central bank monetary policy in both these very important markets hurt the global economy at all over the next few months, hurt flows into emerging markets?
It certainly will if we see basically a destabilisation or a tightening of financial conditions. And it's something that the International Monetary Fund has warned about in the last week, that is one of the downside risks as we move forward, that markets, as you know, tend to overshoot and undershoot and over-anticipate. And if we see a precipitous tightening of financial conditions in the major economies, major markets in particular, well, then that would put growth at distinct risk. And that's a concern for the Fed. It's also a concern for the Bank of England. And both the Fed and the Bank of England are progressed in this process more than, of course, the ECB or the Bank of Japan. They're also concerned about what we might see on the financial front in China and whether that could precipitate a tightening of global financial conditions. So the risks are still there. And I think they're added to by the fact that, of course, Janet Yellen's term as chairman of the Fed actually ends in February next year. And it's uncertain whether she'll be reappointed, which has been the norm, or whether there'll be someone else like John Taylor appointed as the chairman of the Board of Governors.
Yes, that's the one key uncertainty. Finally, a very quick question, Richard. What's your call on the dollar, which has been difficult to read given everything about President Trump's presidency, and the euro, which of course saw declines on the back of Mario Draghi's comments yesterday?
I think probably we're going to see the dollar drifting off a little bit, and it will be around that policy uncertainty that we've talked about as we go to the outturn of the year. Also, it's fair to say that US securities markets generally and capital markets are pretty much fully priced the growth they're getting. And some would say they've overpriced for that growth. And that means that, of course, people will be looking to maybe curb some of their exposure to those US dollar denominated assets, which have driven up the value of the US dollar.
Richard Gibbs, thanks so much for joining us this morning and helping us decode some of what's going on with central banks across the world. So that's the post-ECB picture.